The basics of cryptocurrency. Cryptocurrencies let you buy goods and services, use apps and games, or trade them for profit. Here's more about what cryptocurrency is and how it works. What is cryptocurrency? Cryptocurrency, or crypto, is a digital currency used as an alternative payment method or as an investment. Cryptocurrencies get their name from the cryptographic techniques that enable people to buy, sell, or trade them securely without the need for a controlling authority, such as a government or financial institutions. For example, Bitcoin was developed primarily to be a form of payment that isn't controlled or distributed by a central bank. Why do people invest in cryptocurrencies? People invest in cryptocurrencies for the same reason anyone invests in anything. They hope its value will rise, netting them a profit. If demand for Bitcoin grows, for example, the interplay of supply and demand could push up its value. If people began using Bitcoin for payments on a huge scale, demand for Bitcoin would go up, and in turn, its price in dollars would increase. So, if you purchased one Bitcoin before that increase in demand, you could theoretically sell that one Bitcoin for more US dollars than you bought it for, making a profit. The same principles apply to Ethereum. Ether is the cryptocurrency of the Ethereum blockchain. Learn more about blockchains here, which is where developers can build financial apps without the need for a third-party financial institution. Developers must use Ether to build and run applications on Ethereum, so theoretically, the more that is built on the Ethereum blockchain, the higher the demand for Ether. However, it's important to note that to some, cryptocurrencies aren't investments at all. Bitcoin enthusiasts, for example, hail it as a much improved monetary system over our current one and would prefer we spend and accept it as everyday payment. How does cryptocurrency work? Cryptocurrencies are supported by a technology known as blockchain, which maintains a tamper-resistant record of transactions and keeps track of who owns what. The use of blockchains addressed a problem faced by previous efforts to create purely digital currencies, preventing people from making copies of their holdings and attempting to spend it twice. Individual units of cryptocurrencies can be referred to as coins or tokens, depending on how they are used. Some are intended to be units of exchange for goods and services, others are stores of value, and some can be used to participate in specific software programs such as games and financial products. How are cryptocurrencies created? One common way cryptocurrencies are created is through a process known as mining, which is used by Bitcoin. Bitcoin mining can be an energy-intensive process in which computers solve complex puzzles in order to verify the authenticity of transactions on the network. As a reward, the owners of those computers can receive newly created cryptocurrency. Other cryptocurrencies use different methods to create and distribute tokens, and many have a significantly lighter environmental impact. Why are there so many kinds of cryptocurrency? It's important to remember that Bitcoin is different from cryptocurrency in general. While Bitcoin is the first and most valuable cryptocurrency, the market is large. There are more than 1.8 million different cryptocurrencies in existence, according to CoinMarketCap.com, a market research website. And while some cryptocurrencies have total market valuations in the hundreds of billions of dollars, others are obscure and essentially worthless. If you're thinking about getting into cryptocurrency, it can be helpful to start with one that is commonly traded and relatively well established in the market. Thoughtfully selecting your cryptocurrency, however, is no guarantee of success in such a volatile space. Sometimes, an issue in the deeply interconnected crypto industry can spill out and have broad implications on asset values. For instance, in November of 2022, the market took a major hit as the cryptocurrency exchange FTX struggled to deal with liquidity issues amid a spike in withdrawals. As the fallout spread, cryptocurrencies both large and small saw their values plummet. Are cryptocurrencies financial securities, like stocks? Whether or not cryptocurrency is a security is a bit of a gray area right now. To back up a little, generally, a security in finance is anything that represents a value and can be traded. Stocks are securities because they represent ownership in a public company. Bonds are securities because they represent a debt owed to the bondholder. And both of these securities can be traded on public markets. Regulators are increasingly starting to signal cryptocurrencies should be regulated similarly to other securities, such as stocks and bonds. The Securities and Exchange Commission has set its sights on the sector generally. The agency has raised concerns about activities including crypto staking, as well as the operations of some large crypto companies. Whether the SEC will treat cryptocurrencies, or specific types of cryptocurrencies, as securities will be at the forefront of crypto regulation and could have major implications for the asset class in the near future. Are NFTs cryptocurrencies? NFTs, or non-fungible tokens, are digital assets that convey ownership of what could be considered an original copy of a digital file. They share many similarities with cryptocurrencies, and they can be bought and sold in many of the same marketplaces. However, NFTs are different from cryptocurrencies due to that unwieldy word in their name, non-fungible. Cryptocurrencies are fungible, so any unit of a specific cryptocurrency is basically the same as any other. My 1 Bitcoin has the same value as your 1 Bitcoin. Cryptocurrency legal and tax issues. There's no question that cryptocurrencies are legal in the US, though China has essentially banned their use, and ultimately whether they're legal depends on each individual country. The question of whether cryptocurrencies are legally allowed, however, is only one part of the legal question. Other things to consider include how crypto is taxed and what you can buy with cryptocurrency. Legal tender. You might call them cryptocurrencies, but they differ from traditional currencies in one important way. There's no requirement in most places that they be accepted as legal tender. The US dollar, by contrast, must be accepted for all debts, public and private. Countries around the world are taking various approaches to cryptocurrency. El Salvador in 2021 became the first country to adopt Bitcoin as legal tender. Meanwhile, China is developing its own digital currency. For now, in the US, what you can buy with cryptocurrency depends on the preferences of the seller. Crypto taxes. Again, the term currency is a bit of a red herring when it comes to taxes. In the US, cryptocurrencies are taxed as property, rather than currency. That means that when you sell them, you'll pay tax on the capital gains, or the difference between the price of the purchase and sale. And if you're given crypto as payment, or as a reward for an activity such as mining, you'll be taxed on the value at the time you received them. Your decision. Is cryptocurrency a good investment? Cryptocurrency is a relatively risky investment, no matter which way you slice it. Generally speaking, high-risk investments should make up a small part of your overall portfolio. One common guideline is no more than 10%. You may want to look first to shore up your retirement savings, pay off debt, or invest in less volatile funds made up of stocks and bonds. If you find this video useful, don't forget to like and subscribe to our channel.